What's up? What's up? What's up, everybody? This is Robin Alicia. I have my guy, Mr. Ken Smith, with me today, and we're gonna jump into a little market update and answer some basic questions about market conditions and things like that. What's up, Ken? How are you today?
What's going on, Robin? Everything's doing well. What about yourself?
I can't complain. I can't complain. Just trying to tackle these goals and stay focused. I know we've been
Right.
trying to connect for a while.
Yep. You're a busy lady these days.
No, you busy. You know, you closing all the deals in Georgia and South Carolina. Yes,
Trying.
yes, yes. So let's get into it. So I'm gonna go over a couple market updates, just some numbers. Uh, and then we're gonna get into a couple questions, let people know about the mortgage side. So
Sure.
especially for my buyers and really how it affects sellers as well.
Right.
So of course, the average sales price for last month in the month of September here in the metro area was $429,878,000.
Which is
Which is
crazy.
right.
That
You
is
said the
just
words
bananas and
right
crazy.
out of my mouth, right? Isn't that
Right.
crazy?
That is
It's
very
up.
crazy.
Yeah. So
And just to not cut you off, but just to
uh-huh.
let people know, FHA, which is the usual loan, federal insured loan that a lot of people do,
Mhm.
less than 3 years ago, the max was in the 300s.
Mm.
And for that average price to be where it is today, and that's the average price. So that means that on average, every house that's sold in the metro Atlanta area is that amount. That's just that's crazy. And that also shows that everybody's not getting it because how competitive it is. A lot of people are not even taking federally insured loan offers, so they're doing
Right.
conventional. So with doing conventional, that means that you have a very strong buyer that 9 times out of 10 has a lot of money up front and they have assets on the back end. So it's a crazy market. It's unparalleled.
Yeah, like because last year this time during COVID, of course, for the month of September, the average sales price was like 374,876. So it's up like 14%, which is
Right.
a significant increase in a year. Uh,
Absolutely.
Days on the market still going about 7 days. Last month it was six though, so we're seeing that trending a little bit upward. Definitely still a seller's market, but hopefully maybe here in the next 6 months or so to just stabilize just a little bit, just a
Just
little
a
bit.
little bit.
Month supply is only 1.3, so that actually did increase from last month, but that's still significantly low. So that
Absolutely.
means, if everything was sold in the greater Atlanta area, it would only take a month, 1.3 months for everything to be gone.
Yeah,
That's means that inventory is significantly low.
it
And
is.
um I don't know. I mean, it's a lot of buyers in the market right now. And
It is.
they
And the
still
number
go ahead.
and that number would be even more if people had somewhere to move. It's a lot of people that would like to change where they live, but they can't because if they want to stay in Atlanta, they have to be able to move somewhere else. And 9 times out of 10, with the equity that they're making off of it, because you already talked about the appreciation, um, they would like to move on to something nicer. And for them to do that, the inventory on that price range is even lower. So it's nowhere for anybody to go. So people are sitting on houses that they would like to come off of, but they can't.
Yeah, yeah, yeah. And the people who are moving, the apartments making a killing off of them. Because I mean, I've had some clients who just elected to rent for a year. They definitely want to take advantage of their equity, so they just like, hey, we're gonna rent for a year or two, see what happens in the market, not have to worry about cutting the grass or fixing anything for
Right.
the next year or two, and just see. So I mean, it's definitely pretty tough, and even now the list price, the percentage of list price is still over 100%. So that
Right.
means we still have just about on average every offer that's a home that's being sold, nothing is being sold at list price. Everything on average is going over. So
Right.
these market conditions are just are beasts. I'll say that.
So to kind of piggyback on the two items you just said, I want people to be very careful that even think about doing the renting for a year or two, because a lot of people, apartment complexes are on a trend because
Mhm.
they're running out of vacancies as well, because a
Mhm.
lot of people are doing that. So people who are usually renting for $1,300, $1,400, apartment complexes are hitting them over the head. They're going up expeditiously more when
Mhm.
it's time to re-sign their contracts, and they're like going up $300 to $400 more
Mhm.
for their new month for them to sign in. And then you're at a place where you can't afford a house possibly, and you
Mhm.
can't afford, for that apartment,
Mhm.
so it's to be very careful. I would always stress to somebody, it's great to take advantage of that equity if you can,
Mhm.
but please have a solid plan in place that you know where you're going to move and what you're going to do, because you can really put
Mhm.
yourself in a bad position.
Oh, absolutely. And that's kind of one of the things that I've been doing with all my sellers. Like, I just really have been educating them and making sure that we don't let's not get ahead of ourselves. So I really want to know what are let's map out a plan for your next residency
Right.
before your house is live, because and especially if the house is nice, I mean
It's gone.
it's gone quick. I'm talking
Right.
quick. So I've had a couple, heard some stories of people just not being able to find anything, and it just creates just a not great situation. So for those other agents out there, I know they're doing it. Just make sure that we're taking care of the clients and not just wanting to sell their home, but truly making sure these sellers have somewhere to go
Right.
before they put their house on the market. Yes. So we're gonna get into it, Ken. I ain't gonna
Let's
hold you
do it.
long. I just we already talking about it, but just kind of tell me from the lending side, what are you kind of seeing in the market today?
Well, a little bit more stabilization, which we kind of talked about. Houses lasting, I think you were saying, the 6 to 7 days, which presents more stability in the market. Houses being sold at 100%, which is great. We're in a capitalist market. You're supposed to sell the house for the most amount that you can get for it.
Mhm.
That's the rule that you're supposed to be able to do. But when you get into the point of overbidding for real estate, at some point in time, you can make a good investment a bad one because of you overpaid, depending on the situation that you're in.
Mhm.
You have to really trust your realtor and make sure you're doing enough market research that if you get in at this place, even if you're $5,000 more, are you going to see another 13% gain the following year, so that you can kind of catch up with that and keep the trend going up? Because the last thing you want to do is, and it's almost impossible, but to be upside down in the house. So you want to make sure you're doing that, because the appraisers, they're held to a pretty high standard as well, and
Mhm.
they've been catching hell on substantiating or validating some of these prices that are over, because there are audits that go on that as well. They'll
Right.
try their best to play as much ball as possible, but at some point in
Mhm.
time, when they get audited, they want to see, okay, is this house worth what it was? Because everybody has checks and balances. So,
Right.
when people are taking loans people are taking loans out for these properties,
Mhm.
they have to make sure that the underwriters, and when it goes up over them, they're going to make sure that the bank is making solid financial gains for themselves, to make sure that they're not going to put themselves in a place that they ran into in 2008.
Absolutely. Nobody wants to see 2008 again. And I know 2008 we're not in that same situation. It was a different beast
It definitely was.
back then. You could talk about how it was just so many bad loans in the
It
market.
was. So the funny thing about that, it's very taboo for the name 2008 to come up, and it's one of those things that plagues are plagues. Even if they're one, another one can be something else.
Hmm.
If you become greedy and you overwork certain things, then
Hmm.
it can be another one. It doesn't have to be as bad as that, but it's going to be some kind of correction
Right.
if it's not sustained properly. It's just like losing weight. You can dehydrate yourself, you'll see it on the scale, but how does your body really feel? But
Right.
it's a
Right.
totally different thing when you lose it and you do things correctly. That's what I'm saying. I think that, especially in the state of Georgia with Atlanta, stuff that's going on in Augusta, the revitalization that's going on in Savannah, some
Hmm.
of the things that's going on in Columbus, it's
Hmm.
Georgia is strong enough to grow without using bells and whistles. We
Right.
have the infrastructure and things that are in place so
Mm-hmm.
that things can grow expeditiously and keep the market from being so volatile.
Right.
So with more houses staying on the market a little bit longer, what you're going to do is you're going to run into more solid deals. You're going to run into people, real negotiators, getting properties for their clients, and
Mhm.
solid transactions are made. Because when people are doing things above board, then they're able to do more and get more and be able to sustain those.
Got you. Got you. Cool. Cool. So tell me, kind of, what are your average rates right now? What are the current market rates?
Right now, the average rate on VA government, we've been low as 2.7, and I have to put a disclaimer out there. It just really depends on how it's packaged to give a accurate number of the APR.
Hmm.
But we've been high twos on government and maybe very low threes in conventional. There was a little bit of a slight spike at the end of last week
Okay.
with the stabilization in the market. They kind of went up a little bit. So we're very interested to see what the rates do tomorrow, because today, Columbus Day, is a non-funding day. So the market wasn't open. So we'll see how it goes tomorrow, and then we'll be able to kind of know exactly where we are. And even with that, anytime you're able to mention to anything on a 30-year is just amazing. I bought my first house 2004, and the rate was 6%, and that was considered a good rate at the time. I had
Right.
pretty good credit when I got it, and you know where we're at now. No matter what the market does within reason, this
Hmm.
is the time to buy. This is the time to refinance. This is the time to get out of. If you bought your house before 2018, this is the time to readjust your mortgage balance in your portfolio.
Right. Right. I talk a lot of people, tell people a lot of times, equity is unrealized gain until you gotta make a play on it. So they
You
they
got
either
to.
gotta call you and refinance and
Right.
cash some of that out, or they have to sell their home. Those are the only two ways that that you're able. Now you can leverage your equity and things like that, but
Mhm.
your equity, you can have $100,000 worth of equity today, and you can have 50,000 in March. So
Absolutely. So
yeah,
you
so
have to leverage it when you can, because loan to value is so huge. And just so people know what loan to value is, we call it LTV. It's a pie chart. Depending on how much you own of the house, that depends on how much equity you have in the house. So let's just say, just for easy numbers, if the house you have is worth $100,000,
mhm,
if you have $20,000 worth of equity, then you're 80/20 loan to value.
mhm,
So the lower your loan to value is, the more flexibility you have to be able to borrow against that money, so that you can pay off things that depreciate, like cars and
mhm,
credit cards and things like that. Some people feel a little hesitant to roll anything into a 30. I'm paying over 30 years, but if you look at how much the interest you're paying over 7 years, you'd be paying more interest in 5 to 6 year loans than
mhm.
you would over a 30-year period. And you could have more appreciation to help make up that money, or refinance again, or sell in the future, or take the money that you're making and saving off
Mhm,
of five, six, $700 car notes,
mhm.
reinvest that and put that into your family and do certain things that will make more money for yourself. So definitely you have to capitalize on it when you can.
Absolutely. So tell me kind of what, when you just kind of already got into it, what that rate means for buyers or somebody
Right.
who's refinancing, that they're pretty much, getting outstanding rates on, a substantial purchase. I mean,
Right.
people try sometimes to negate the value of loan officers and realtors, but those are the people who are helping you make the biggest financial purchase in most people's lives.
Right.
That's the biggest purchase they make.
It is very unfortunate that we have the for sale by owners. I deal with it, not too often,
Mhm.
but people think that we're big advocates for realtors because they're our referral partners, but it's a professional. Can your mama take a splint out your finger? Absolutely. But dang, I sure would like a doctor to do it. If I have a doctor available to do it, that's what to do. That way you can not sell yourself short. and guard contracts, it's a lot of verbiage and it's a lot of things that's in there that is for the benefit of the borrower and the seller. It is
Right.
no reason for a borrower to
Mhm.
not have representation for a realtor, because the seller is paying for your representation. So
Mhm.
it's not like if you go to court and you get public, a public person that's representing you. No, you get to pick. If you want the Johnny Crocker, which is Rob and Alicia, to handle your transaction, the seller is going to pay for that.
Right.
It comes directly out of their cut. So you have to have representation. And on the flip side, as a seller, when repairs need to be done, when the real value of a market analysis, I know some realtors that don't even know how to do a real market analysis.
We ain't gonna get
So
into
you could
it,
be,
but yes, absolutely.
yeah. So you really need to lean on professionals for that. If you're looking at a profit gain of 70, 80,000, what is 6% of that to make sure that you get the most money out of it without the hassle, without just knowing how the professionals do it, the right way to do it.
Right.
So it's very huge to lean on people for that.
Absolutely, absolutely. So tell me, how does the rates being so low affect sellers? So people who want to sell their house, what does that mean to them?
What it means a lot. It helps. We were just talking about the average house, being $400,000, the average sale being $400,000. If the rates wasn't where they would be, where they are, you're talking about a $35,000 to $4,000 mortgage instead of a $25,000 to $3,000 mortgage, depending on what loan program and how much money they're putting down. So it's helping people get top dollar for what they're looking for, because you can sell at the higher price point because you have a bigger pool of buyers that are approved to do it, because they're paying interest at pennies on the dollar, almost $5 to every thousand. So the buying power is just huge, and it's just helping sellers really capitalize on their gains of their equity.
Well, absolutely, absolutely, yes. Well, any other market updates or tidbits you want to add? Just to add, I'm big on giving the people some value. Um,
Okay. Well, I
from
would
the
definitely add. I would definitely add this. If you're in a position to buy, and what a position to buy means, one, don't sell yourself short. You could definitely be in a position to buy, whether you're a single mother, whether you're a single father, or whatever you have going on. Consistent job, consistent employment for 24 months, depending on if you're 1099 or if you're W-2. Put your hat in the ring. If you're paid, save your money, leverage your 401k, pay into a 401k. If you look like today, pay into a 401k. I know there are some people that have been crooks in it, but those are definitely the outliers. Pay into your 401ks, save some money. The biggest way to save money is a 401k. Um,
and tell people the benefit of using their 401k, like because I don't know if some people don't understand how they can leverage their 401k to
So you can leverage your 401k. And my person is beating your chest saying, hey, take away from your retirement so that you can buy a home. Yes. It's definitely a great way of doing it. And if you have the flexibility to be able to take a loan, you pay yourself back with interest. So you can leverage that to be able to get yourself in the house. It doesn't matter if you have $200,000 in your 401k and you're still renting. You're paying somebody else's retirement, because most people that are getting these houses, they're renting them out and you're paying for their retirement. So pay yourself back, go ahead and get in the game as soon as possible. Don't keep borrowing against it. Do it for a real purchase that's going to help your family and obtain some generational wealth. You can do it. Like, you wouldn't believe some of the success stories. I know a guy that works at CVS that makes $50,000 a year, and he bought himself a nice house. He saves his money, and the house that he was already in, his mom moved into his old house, and now he's able to pay both houses off because he has great credit, low interest rate. So you don't have to play a sport or do all these different things or rob Peter to pay Paul to be able to attain generational wealth. So home ownership is just huge. One of the 48 laws of power is despise a free lunch. I'm not big on down payment assistance programs. There are some good ones out there, but it's not one thing that I really lead with. I'm in South Carolina as well. SC Housing is a very strong one. There's like the city of Atlanta, some grants that are there that are around that does
Okay,
have
Atlanta has a lot of grants in the city of Atlanta.
Tell them about them.
No, I'm saying I know Invest Atlanta. I know a couple people who've used Invest Atlanta. But you just have to with grants. You definitely have to know all the guidelines. So
you got to know the guidelines and don't take out more of a loan than what you're getting a loan for and have silent liens and all that. Really look at your subsidy and make sure that it's going to be something that wins. You can't beat is like the old saying, money on a tree. There's no such thing as a money on a tree. 9 times out of 10, if you're borrowing for something, it can come back to bite you. So you have to be very, very careful. You can't beat putting your own in to be able to get your own back out. That way you can control your own profit margin when you leave ownership. It's called home ownership, not home borrowership.
Got you. All right, Ken. Tell the people how they can reach you if they're thinking about purchasing or just want to refinance, see what their options are, how they can reach out to you and talk to you and see if you can assist them.
Absolutely. I'm independently licensed in Georgia and South Carolina, but here at New American Funding, I can help you just about coast to coast. But reach out to me at area code 404-805-9808. That's 404-805-9808. And you can also go to my website, which is gowithken.com. And that's Ken with one N, GOWITHKEN.com, gowithken.com. They'll have a comprehensive application there for you to fill out. And if you like, let me see if that boy just a fast talker, if he know what he's talking about. I have over 200 5-star reviews on there, and you could be able to look at them. One was just posted on there today. So I really care about my people. I want the best for people. A lot of times, I'm the first conversation that people have when it comes to home ownership. Their parents maybe never have bought, or their parents have bought. A lot of times, especially in our community, we keep everything so taboo and hush hush. We don't share the right things to do. And
that'd be a whole nother show, Ken. That's a whole nother show.
That is. I hold that one. But that's the best way to get in contact with me. Gowithken.com, 404-805-9808. Look me up on Facebook, IG. I'm here.
I appreciate you, man. We got a lot of rate of excellence going around. Ken,
absolutely.
Another high school classmate doing big things. And I appreciate you, taking some time out today to hang out with me and get people some information on the lending side of this real estate industry.
A big congratulations to you. I enjoyed every transaction we've done together. Your professionalism is off the charts. Congratulations. Much kudos to you.
More to come for sure.
Absolutely.
All right. Well, you have a good evening. Tell the wife and the kids hello.
Absolutely. Thank you.
Bye-bye.